welcome to the 1262nd edition of Short-Term Trading Live with Oscar Carboni, and of course that would be me. Good evening, traders, and welcome to 2015. Can you imagine it's 2015 already? My goodness. Couple of things let's get out of the way right away. One, we know futures trading can be and is extremely risky, can cause substantial financial loss, and is certainly not suitable for all traders. This, of course, is my opinion, but I've been doing this for 33 years, and if you ask the street, my opinion's not all that bad because I take it directly from the charts, and that's what these videos are about. Teaching you how to read the charts. This video is coming to you on a Monday night for trading, Tuesday, January 6th, 2015. Traders, firstly, the projection for 2130, 2150 for the year 2014 did not exactly get hit. But we made the call when the market was trading between 1790 and 1800, and it got all the way to the 2080s, like 2084. Before it didn't make the projection. That is not bad considering, right? That was absolutely the right direction and hundreds of points. We'll probably get to that projection, but 2015, not 14. So that will come off the board, right? We'll get rid of that. We know that this video is for trading tomorrow, and there's different things on the board for trading tomorrow, so let's go address them. First of all, red omni for emini, S&P, NASDAQ, Dow. We've got a couple of stocks we're looking at tomorrow. There may be more, but two of them that strike us is Tesla, TSLA, and GMCR, Green Mountain, Keurig, whatever you want to call it, the coffee producers, right? We're looking at the downside of both of them. We'll get to that. We'll see you at livewithoscar.com. We'll talk about the stocks tomorrow because they're not open at night, and the commodities are. So let's get to those. Red arrow, NASDAQ, S&P, Dow, Tesla, GMCR. One on the board. Support is expected to be tested tomorrow in ES and NASDAQ, hence the red omni. Support. We do expect that support to hold, possibly. We'll let the market tell us that. We're starting off selling. If support holds, we'll talk about it. I'll show you that on charts. I have a question which I'm going to pose to you, but before we even go to anything else on here, this question: since when does the U.S. not prosper alone? Let's talk about some news. We'll get into that, and we'll finish what's on the board, and I'll show you some charts. As you know, traders, I read the newspapers very thoroughly on the weekends. I had a lot of time this weekend to read all the industry regs that are out there, from Wall Street Journal to Investors Business Daily, you name it. If they print it, I like to get my hands on it and study it on the weekends. So I'm reading through the weekends, and here is what I found overshadowing everything else that I thought was in the papers. Two topics, we're going to talk about them. One, I have found the newspapers this weekend to be hugely slanted towards the thought that the U.S. economy cannot prosper as an island, or cannot continue as an island of prosperity. I ask you this, which is on the board right now. Since when does the U.S. need anybody else to be a great nation? I have been alive for 50 years. I've been watching these markets and watching the economy. I've never seen a time in my 50 years that the U.S. could not move alone. We are an extremely wealthy, consumer-driven society. This is a very rich country. We can easily sustain this path for quite some time until our standalone, or as a nation, as a standalone nation, runs out of steam. We are a consumer-driven economy. We literally buy dog crap. We put it on the shelf in our house. We use it. We throw it in the garbage. We buy more dog crap the next day. We don't care who makes it. We make it. You make it. China makes it. We'll use it. We'll throw it in the garbage. That is a consumer-driven society. There is no way the U.S. can't move ahead without Europe, and you will see that happen. I've got a lot to talk about when it comes to Europe and coming QE, but we've got a lot of videos coming this week. Let's start off with some topics, and then we'll move on to other things. But I'm here to say this. I'm sorry for you pundits out there that think the U.S. can't go at it alone. It can for several years before the market tapers. I will show that to you. Traders, we're going to see some support tested, but I would not, I am going to write this down now, do not fall in love with the downside, and I'll show you why. There is just no way that you should fall in love with this downside of the emini S&P just yet, and I'll show you why. For now, yes, we're going short. I am telling you, though, do not fall in love with the downside. There's plenty of reason to think this is a big, booming market, and one of the reasons is on the board. We are having an energy pullback. An energy pullback in the U.S. stock market. That is what you are seeing right now, or a repricing. This is not a crash. How could it be? How could the top have come in with such prosperity taking place in the United States? They just opened up Freddie and Fannie. Now, basically, banks can give just about any screwball who can sign papers a mortgage again. That's going to drive the real estate. When it drives real estate, it absolutely makes people go to Home Depot and they put on new roofs and they put up new walls and they buy this and they get their driveways done. Prosperity. It helps the whole country. So you've got that going on. The energy pullback, how does that fit in? Well, let me see if I'll show you on charts, traders, but let's take a look at the market as a whole. All right, let me just see if I can get a little piece of this board, because I'm probably going to have to erase a little something to prove a point. So let's do it right here. All right, so you have to understand how the market works as a whole. You've got 100% of the S&P, let's call it 100% of the S&P inside this box. Well, as it turns out, for all of last year, no one knows the exact figures because everything fluctuates, but somewhere between 22 and 27% of the stock market is made up of oil stocks. Oil stocks. Okay. If the oil stocks were 22 to 27% of the market, the oil stocks have been cut in half from the 60s to the 30s. They are no longer 27% of the market. It is impossible. So they're more likely 16% of the market. That means the market has to price itself again. It's got to come down a little bit because those oil stocks, all of them drove down in a few months like gangbusters while the S&P went up. But those oil stocks make up a certain sector or percentage of the stock market. If they come off that rapidly, of course the stock market's got to come off a little. But that would equate to a pullback and not, absolutely not, a fall. So don't fall in love with the downside. I will show you reasons on the charts why this is absolute. If the market continues and turns into a bear, so be it. We are shorting it now, right? But we don't think that the short side's going to last very long. So with the possibility, or not possibility, absolutely unequivocally, the fact that the oil stocks have halved themselves, it's no longer 22 to 27%. How could the market sustain that level? What it needs to do is drop down to reach equilibrium with the now cheaper oil stocks and then head back up. And that is what's going to happen. So stay tuned. Do not fall in love with the downside. Traders, remember the topics. Support is to be tested. I have a question. Since when does the U.S. not prosper? Come on, everyone think about how the U.S. has been. Have we ever needed China to prosper? Did we need Europe to prosper? Have we needed Cuba to prosper, or Greece, or Venezuela? The U.S. has always done well no matter what the rest of the world is doing. Long-term view. Why would that stop today? Don't listen to anybody's nonsense. We are becoming such great exporters of oil. It is helping everybody. Let me talk about that one more time. Let me ask you a question. How many of you have calculated how much money you personally have saved since the oil started coming down? Me personally, we've calculated about $500 in saving gas in the last 2 months alone. I don't even drive to work. I don't have a cab company. I don't have a trucking company. I don't have a shipping company. I don't send product around the country. Think of all the companies that are saving hundreds and hundreds of millions of dollars. Think about the people, unlike me, who drive 2 hours to work and back every day. What are they saving if I save $500 in 2 months? This is a big boom for the U.S. I kid you not. Crude oil, cheap crude oil, is putting money in your pocket, directly into your pocket. Every one of us, traders. How could that be a bad thing? Don't listen to these psychos in the newspapers. How could that amount to something bad? It will not. You will see. The energy pullback will equate to a good event, not a bad one. Traders, with no further ado, let's go look at some charts. Okay, traders, a very familiar chart. Charts that I've been showing you and I showed you for weeks before the break, the Christmas break or New Year's break. So here we are, we're back to the very same chart, the chart masterpiece. E-mini S&P on the weekly. Note the black average. Hold number 1, hold number 2, hold number 3, hold number 4. You can even count that one if you want. Hold number 5, hold number 6, hold number 7. Number 8 gets through, breaches, but runs back up. Holds number 8, really. So we call this 1, we call it a loss, even though it got back above. So we're looking at right now 8 wins and 1 loss, and it's going to be tested again, likely tomorrow, because that's where the average continues, and here's the market coming down. Likely, you're going to test the support again tomorrow. Will it be 9 and 1? Will it be 8 and 2? We will find out very shortly. Keep your eyes posted. Support is being tested. Let's at least break the support and continue to drop before we put a nail in the coffin of this wonderful bull market. When I get phone calls from lunatics that tell me that the top is in, when I look at a chart like this, you are just guessing, like you guessed here and you guessed here. And these same lunatics called me at every single dip. Every dip I get the emails, I get the phone calls, the same exact words come out of their mouth. And then I say the same thing. Don't you remember when you called me this time and I said no, and this time and this time and this time? And they just continue to rattle and talk about their nonsense. Sooner or later, maybe they'll get one right, but come on, guys, you can't call the top with every dip. Let's see what happens next. Then we've got this. Dow Jones Industrial Average on the weekly. Once again, here's the average. Test, hold, test, hold, test, hold, test, hold, test, hold. Breaks once, gets back above, tested and holds. It's coming back to test it again with a lot of room right here. So let it have another down day. Does that mean it's a bear market? Traders, is my arrow going up or down on this chart? I mean, really? The traders that are already calling this, condemning this as the bear market instead of this as the bull? I mean, come on. Don't be lunatics out there. Take your time before calling a market over, okay? Then there's bonds. Now, I brought this chart out because many traders have said, Oscar, if bonds are going up, don't you think that's the top in the market? And I'm here to say bonds have been going up for as long as the stock market has. And now that bonds have shown no way, this was a double top, yes, but no way will this be a triple top because we're through it and we're through it again. No triple top in bonds. This is US T-bonds, right? T-bonds have been rallying as long as the stock market has, since 2008-9. T-bonds are rallying. Why should the stock market not just continue with the T-bonds? That's the way of the world for the last 4 years. Why not continue? And then there's this. Very, very interesting chart. This is the Oil Services ETF, the Oil Holders ETF, or the OIH. It was $58. It went to $33.54. This is what made up somewhere between 23 and 27% of the stock market. It did when it was 58. It does not make up this percentage any longer when it's 33. Hence, the stock market's having a pullback. That makes perfect sense. However, the gravity or the effect of the crude dropping will not be as dramatic as time passes. Why? Because the sector is not $58 anymore. It's $33. And if it's $33, it's worth that much less of a percentage of our stock market. You get how this works? So if this is what happened to oil, then eventually you'd have to expect the stock market to just adjust to this a little bit. Now, what am I getting at? Let me show you this in a different fashion. This chart, traders, two charts, one overlaid over another. This is crude oil, right? Crude oil, I'll mark the crude oil chart for you so you can see the difference. Whoa! That's the crude oil chart. This is the E-mini S&P. So what you've had for quite some time is E-mini S&P up, 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 crude oil up, wavy, but up, 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 mostly in upward direction. The S&P continues to go up and the crude oil starts to break down. Those very same stocks that made up the 23 to 27% of the stock market were stocks that used to cost this much. Look at what's happened, right? So those stocks are no longer 23 to 27%. They're probably 16 to 17% now of the stock market. But you'd have to expect some kind of a pullback. Now, here's what I'm trying to show you. Crude oil went down this far. The S&P went this far so far because of it. That's it. This is a positive for the stock market in the end, not a negative. cheap crude will equate to higher S&P. You'll see that's what this will amount to when the smoke clears. Traders, pull your own charts, do your own homework, but remember the fact that the stocks that make up the crude are part of the stock market, and if they continue to drop like this, at some point you got to come off a little in your stocks to adjust. That's what you're getting. Pull your own charts, do your own homework. I'll see you at livewithoscar.com. So traders, you've seen the charts. There's my argument for why we'll start off absolutely selling emini, NASDAQ, Dow, probably Tesla and GMCR. We'll see what we're going to do with those. That's the stock side of our trading. Come on down to livewithoscar.com. Check the stock recommendations. Check the commodity recommendations. I give absolute specific commodity recommendations and stock recommendations. Where to buy, where to sell, the suggested stop, where to take profits if they come our way. So remember, come to livewithoscar.com. Come meet me in my free chat room and allow me to help you out with our recommendations and our chart analysis. Anyone who's here in Vegas, I'll see you at the CES, baby. Consumer Electronics Show. I can't wait. The biggest show in Vegas. I'll see all the new gadgets. I'll tell you about those. So, remember, Tesla, GMCR. Look for some downside. Traders, don't fall in love with the downside yet. It may actually be the top, or we might be crashing, and all the lunatics might finally have their day. But let's look at the guys. Let's stay with the guys who look at charts over the shoot from the hip, call the top on every dip, guys. They're crazy. All right, so can I pose that question to you once again? I want you to all just sit and think your whole lives, if you're my age, since when did the U.S. not prosper? No matter what news you heard from any other part of the world, U.S. always seems to get back on its feet somehow. It's what we do. Hello, United States. All right, so a lot in this video for you to consider, but hey, it's a new year. There's a lot going on. I'll slowly start doling out more stuff for you throughout the week. I have some great support to show you on these charts. If in fact we get through the little support I showed you in tonight's video, I've got major support levels that I don't think will be taken out in E-mini, S&P, and NASDAQ. So again, come to livewithoscar.com, come into my free chat room and allow me to help you. Traders, lastly, subscribe to my YouTube videos. This way you will get an email from YouTube every night if I put out one of these important videos. They are timely. You need to see them before markets start jittering for the next day. All right, traders, again, I'll see you at livewithoscar.com. Thank you so much for coming and watching my videos. I missed each and every one of my OMNI for the last 10 days. Believe me, I'm bored without you guys. It's a give-take relationship, so thank you so much for all your support, OMNI. Always remember this. These markets are very volatile. Never trade without stops. And try to keep your emotions at bay. I know that's not going to be easy. But see what you can do. Because I know we get in trades. And guys from my chart are going, oh my God, it went up 3 points. What do you think, Oscar? You know what I get like? And I go, hey guys, it went up 3 points. Relax. You know what I mean? Turn off those 30-second charts. But that's the name of the game. People get nuts in this division, in this arena. So let me tell you, one of the things I can help you out with is remember that when you put your stop in, you've got basically insurance on your position. Your emotions should sit at bay. So remember, say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll. Welcome to 2015, OMNI. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.